China's foreign trade remains strong, despite shipping disruption in the Gulf region and ongoing trade friction with the United States. In the first 7 months of 2026, China's trade in goods was over $4.3 trillion US. That's up more than 17% year on year. In July alone, total trade was $674 billion, a jump of nearly 20%. Imports grew faster than exports, helping to narrow China's overall trade surplus. In the first 7 months, exports grew 14%, imports increased 22%. In July alone, exports climbed nearly 18%, imports up 21%. Mechanical and electrical products accounted for nearly two-thirds of China's total exports. Shipments of electric vehicles, lithium batteries and wind turbines recorded strong growth. The exports of 3D printers, industrial robots and ships also increased. Now, the figures also reflect strong global demand linked to artificial intelligence and high-tech manufacturing. China's exports of integrated circuits nearly doubled in the first 7 months of this year. In July, they surged more than 166% from a year earlier. If we look at China's trading partners, double-digit growth with ASEAN, Africa and Latin America. Trade with the European Union also expanded. Trade with the United States declined, but only slightly. Gerard Lyons is a senior independent director of the Bank of China here in the UK. Hi, Gerard. Thanks so much for joining us. It looks like a resilient picture, but what does it say to you?
Well, it certainly is a resilient picture on the trade side for China. It reflects sort of wider concerns about the Chinese economy. But in terms of the trade performance, it's a particularly strong picture. I think the three issues really from the trade side are the scale, what and where. The scale, as you've highlighted, it's a pretty impressive performance on exports. In terms of what, China has suddenly changed in the last few years from being focused on low-cost type exports, benefiting in the past from cheap labour in China, and it's certainly an indication now that China has moved up the value curve with a lot of emerging technologies and a lot of high-quality exports. And also the where is very interesting, particularly in the wake of the trade sanctions last year with the States. Is a clear indication that China has been able to diversify not only to the regions you've mentioned, but in particular, I would stress, the European picture looks quite interesting for the future. So scale impressive, the quality of the exports improving, and they've diversified to ASEAN, to emerging economies and to Europe in particular.
China's imports grew more than its exports. Do you see that as a problem?
No. Well, China's overall trade picture is quite impressive. It exports generally far more than it imports. The bounce up in the imports is a positive signal. One of the interesting challenges about the Chinese economy this year has been the two-speed nature of the economy. In the first half of the year, the economy slowed significantly between the first and the second quarter, still had 4.7% growth in the first half of the year. But the latest indicators suggest that China will be at the lower end of the 4.5% to 5% growth range for this year. But what we've seen, in addition to that strong export picture and strong trade picture that we talked about, has been pretty sluggish domestic growth. Consumption really only ticking over, weakness in the construction sector. If there's any indication of imports picking up, and if that's mirrored also by stronger retail sales in coming months, for instance, then that would be a positive sign. But for the moment, I wouldn't overstress the import picture because it's still against the backdrop of what I would say is a sluggish domestic demand picture.
Fair enough. A quick comment on the fact that trade with the US only declined a little bit, if you look at the barriers and the tussles that are going on currently, and that trade with Europe has grown fairly substantially, I think just under 10%.
Yeah. I think this is a legacy of the involution that President Xi Jinping and others have talked about over the last 24 months. China's export sector is reflecting the strength of its industrial sector. And what we're seeing on the export side is a changing composition of China's exports, not only in terms of where it's going to, but in terms of the export composition towards Europe in terms of electric vehicles, more linked to technology. And that's an indication of how the competitiveness of the Chinese economy has changed. And China is now becoming very competitive in higher quality type of goods as it attempts to move up the value curve. Of course, it's helped also by the currency, the Chinese currency, also being very competitive. So the composition change in exports is very evident.
Thank you so much for your time. Really interesting analysis. Gerard Lyons, Senior Independent Director of the Bank of China here in the UK.